Okay, hello everyone. Welcome to this international webinar entitled COVID-19 and the Sustainability of the Global Banking and Financial System. We are delighted to be hosting students today. First, my name is Professor Noha El-Bassiouny. I'm the Vice Dean for Academic Affairs at the Faculty of Management at the German University in Cairo. Together with my colleague, Dr. Dina Yousri, Assistant Professor of Economics at the same faculty, we'll be hosting this webinar. We are honored to be having today Mr. Omer Ismail. Mr. Omer is a partner at Goldman Sachs and the head of the firm's U.S. consumer business. In his role, Omer oversees Marcus by Goldman Sachs and his partnerships with Apple, Amazon, Walmart, and JetBlue. Under Omer's leadership, Goldman Sachs consumer business has grown to $7 billion in loan balances, $96 billion in deposits, and 2,000 employees, generating more than $1 billion in annual revenue. Omer has been recognized as one of Fortune's 40 under 40, Business Insider's 100 People Transforming Business, and Crane's 40 under 40. He was featured in The Money Hackers, How a Group of Misfits Took on Wall Street and Changed Finance Forever by Daniel Simon. Omer's career was also highlighted in How to Win in a Winner-Take-All World, The Definitive Guide to Adopting and Succeeding in High-Performing Careers by Neil Irwin. Omer has grown up in Karachi, Pakistan, and earned a BA from Dartmouth College and an MBA from Harvard Business School. He currently serves on the board of directors for the American Pakistan Foundation and the finance committee for the Grace Church School. He lives in New York with his Egyptian wife and 2 kids. We're very honored to be hosting you today, Omer. Without further ado, I leave the floor to you. We will ask a few questions after you finish your speech. Thank you.
Great. Can you hear me?
Yeah, perfect.
Great. Thank you for having me. Thank you for the very generous introduction. I really appreciate it and very excited to be joining all of you. I'll keep my introductory remarks short. I want to keep the conversation interactive. Feel free to ask me any question. I'm happy to take questions from you. I'm happy to take questions from the students. What I thought I'd do is maybe just tell you a little bit about what the Goldman Sachs' consumer business is, how we started it, the journey that we're on, where we're headed, and again, happy to take any questions and keep this very interactive. So for those of you that are less familiar with Goldman Sachs has been around for 150 years, but for the vast majority of that time, it has been a corporate institutional investment bank. That is what Goldman Sachs is known for. We give advice to large companies and corporates and institutions about M&A, mergers and acquisitions. We give them advice about financings. We help them with sales and trading. Those are the businesses that Goldman Sachs has been involved with for the vast majority of its 150-year history. The business that I'm involved in, the consumer banking business at Goldman, is very new to Goldman Sachs. We only started it 4 years ago. And really the reason for starting it and how we've built it is that this is really a startup inside a very, very large institution and inside a large bank that has been around for a very long period of time. So the reasons for starting it were very simple. We had all the benefits of being a bank. We had the balance sheet, we had the brand, we had the ability to risk manage, but we did not have any legacy technology, we did not have any legacy business models, we did not have any legacy branch footprint. And so really the idea was, can we take the best of both worlds? Can we take the advantages of not having any legacy and starting from a clean sheet of paper, really building technology, building consumer products, building a bank on your phone completely from scratch without having any legacy costs, but doing it inside a place that has a brand, has a bank, has a balance sheet. And that's really been the journey that we've been on for the last 5 years since I first started working on this. if you think about the US consumer financial services market, and I'm sure this is true in Egypt, it's true in parts of Europe, is that the way consumers bank is changing. And if anything, what has happened during the course of the last 9 months as we've been dealing with this pandemic, that has only gotten more accelerated. You know, we all grew up going to, you know, our bank branch in order to open an account, in order to take on a mortgage, in order to get a car loan. Today's consumers, the people that are growing up, the students that are in this auditorium, they're used to doing every single thing on their phone. They're used to ordering food on their phone. They're used to getting an Uber on their phone. And so it's true in the US, I'm sure it's true in Egypt. Banking has been behind the curve relative to a lot of other things that consumers are able to do on their phone. And if I think about the next 10, 15, 20, 30 years, you know, there's only one direction of travel in terms of how consumers will be consuming banking products. They're going to be doing it more and more on their phone. And so we believe inside Goldman Sachs that the advantage that we have, unlike people that have bank branches and that have been in the banking business for the last 40, 50 years, is that we can create user experiences for consumers to be able to get banking services on their phone without you know, disrupting our existing business, because we don't have an existing business to disrupt. And then the final point that I just make is that, you know, if we think about so much of the disruption and the innovation that has happened across every single industry, it's less about what the actual product is. People have been getting loans or people have been, you know, saving their money for thousands of years, for hundreds of thousands of years. The actual loan or the actual savings account is not changing. What is changing is how consumers are actually consuming it. By the way, that's no different than what Amazon has done or what Uber has done. If we think about those two very, very successful examples, in the case of Amazon, you know, the toilet paper that we buy on Amazon or the baby formula that we buy on Amazon is no different than the toilet paper or the baby powder that we would buy in the local neighborhood store. But what Amazon has done is that the ability to actually find it, order it, get it shipped to your house, be able to consume it without ever having to leave your house is what has changed. Same with Uber. It's not like the actual cab or the taxi has changed that much. What has changed is the way that you're able to, you know, schedule your ride, ensure where the pickup is, be able to do it all on your phone. And so much of the disruption that's happening in the world is around the consumption experience. And that's where we spend a lot of time in my business thinking about how do we change the consumption experience of banking. Let me share with you a couple of just stats about our business, kind of where we are, what we're doing. And then again, I'm happy to open up the floor to any questions that you have. We started this business from 0 employees 4 years ago. It's been a very hyper-scale startup inside Goldman Sachs. Over the last 4 years, we have gone from 0 employees to 2,000 employees in a span of 4 years. Goldman Sachs owns 100% of this business. It's a fully owned subsidiary, but Goldman has invested over $1 billion in the business. Today, we have over 5 million customers, again, starting from 0. We've done 4 acquisitions since we started, so it's been a combination of building on our own as well as acquiring other companies to scale our business. But in many ways, even though we've had good success, we feel like we're just starting out in terms of continuing to build out all of the banking products that a consumer needs to consume on their phone. The final thing that I just say is that, you know, we have 2 go-to-market strategies for the products that we are creating. One is that we acquire customers directly, and, you know, we directly market to those customers. We do lots of digital marketing and a lot of things that a lot of other companies do, a lot of other startups do. But we also have another strategy of taking our products, our consumer banking products, and embedding them or partnering with other people that already have customers but want to offer financial services to their products, and they themselves are not a bank. So the most obvious example of that is that in the US here, we have a very significant partnership with Apple. As you all know, Apple has very, very significant market share in terms of the number of people in the US that have an iPhone. They use their iPhone for everything that they want to do. They pick up their iPhone, on average, 100 times a day. So they can consume music on their iPhone. They can consume news on their iPhone. They can do lots of things on their iPhone. We have enabled, with a partnership with Apple, for consumers that have an iPhone to be able to get a credit card on their iPhone. So Apple's not a bank, but has lots of customers and wants to offer financial services to their customers, and so they've partnered with us in terms of offering financial. So these are our two go-to-market strategies: acquiring customers directly and then partnering with others that already have lots of consumers that want to offer financial services to their products. And Apple is an example of this. The one really final point that I'll make, and then I'll stop, is, it's very easy in any business to get lost in the statistics of, how much revenue you have, or how much profit you have, or how many employees do you have, or how many partnerships do you have. And all of that is very great, and I'm extremely proud of it. And we obviously measure that and look at that every single day. But I think the really inspiring thing for me and for all the people that work in this team is, we are in the business of solving everyday problems for consumers. I grew up in Pakistan. My wife Yasmin's from Egypt. I've obviously, visited Egypt many, many times. Unfortunately, couldn't come this year because of COVID. Hopefully, we'll be there soon. But growing up in Egypt and Pakistan, visiting Egypt, we look around ourselves and look at, the poverty that exists. How everyday people, really struggle to make ends meet. The truth is that although the US is a significantly wealthier country, there's a lot of struggle here in the United States as well. I'll just share one statistic with you. 50% of Americans, if they got hit with a medical emergency that cost them $400, would either have to borrow or sell something in order to get the medical treatment that they need. We're talking about $400, and we're talking about 50% of Americans, would have to either sell something or borrow in order to meet that emergency. And so, and that's true in the US, and I'm sure the statistics in Egypt and Pakistan are significantly worse. So I think that the thing that really inspires all of us that work in this business is the difference that we are making in the lives of people. Financial service, the truth is that if you are rich, whether it's in Egypt, whether it's in Pakistan, whether it's in the United States, you have lots of financial services products that are available to you. Banks talk to you, they give you good deals, you can have a wealth advisor, people help you with their money. When you are not as wealthy, it's really, really hard to get products that are easy to use, that don't have fees, that don't have lots of catches and gotchas that end up hurting your financial picture. And so the thing that's really inspiring to us, other than the stats and all the things that we're creating, is the idea of solving pain points for everyday Americans. That's where our business happens to be. And the stories that we hear from our customers about the difference that we are making in their lives is honestly the thing that is the higher purpose of what we're trying to do. Everything else that I talk about is just an enabler in order to make that happen. So anyway, I'll stop there. Thank you for having me, and I'm happy to take any questions.
Thank you very much. This is quite inspiring. We have some students, undergraduate and postgraduate students from the Faculty of Management at the GUC, from the Economics and Finance majors. So we prepared a few questions that relate to your talk, and we hope that they can learn as much from you as we have in the past few minutes. Actually, a question is that building a new business is quite challenging. What was your experience building Marcus, and what lessons have you learned that you can share with our students today?
Yeah, I think, so a couple of lessons. One, I'm just going to talk a little bit about, building a business. And I think for me personally, some lessons as it relates to building a business inside a large institution, right? There are some advantages and some disadvantages that you would expect of doing it inside a large institution versus just a startup that's, completely on its own, off to the side. I think that the question, any of you in the audience, any of the students that are thinking about building a business or thinking about joining a startup or a new business, I would really encourage everyone to ask 3 fundamental questions about the business. One is there a significant unmet need that you are trying to solve? That's question number 1. Are there customer pain points that you want to solve? What is the customer not getting that your product or your service will help them get? So that's kind of question number 1. Question number 2 is, does your company or your startup have the right to win? What is your competitive advantage relative to anybody else that is trying to do that, right? The third question that I would ask is, are you willing to invest for the long term? Because building a business, there's no quick flips. There are no easy answers. It's long, hard work, and it takes a long period of time, both in terms of cost and resources. And then the fourth question, and I said 3 questions, but now I have 4, is, do you have the right team in place in order to execute on those? Unmet need, right to win, long-term orientation and willing to invest, and the right team. And I think that for me, as I think about the business that we are in, and that we've started 5 years ago, or prior to this, I used to be a private equity investor for 10 years, investing in companies. Those 4 questions for me have been guiding principles in terms of how to think about, whether a startup is going to succeed or not. And it's a good framework. So, I'd encourage everyone to think about that, whether they want to start a business or join a business. I think as it relates to starting a business inside a large place, the thing that I'd say is that, there are lots of successful examples of businesses that large companies start that succeed, and there are lots and lots of examples of ones that don't succeed. And I think that you have to have a very fine balance between getting the best of what the large company has to offer, but at the same time giving the startup the room to breathe and be able to execute. Because if you start to put the established processes that mature businesses go through on a startup, the startup will have a really, really hard time being able to execute on the plan. And I think that is a very fine line that you have to navigate, and that we've tried our best to do. The second thing that I just say is that inside the U.S., Goldman Sachs is a very well-known brand. We're often in the media. We are highly regulated, and so clearly the advantages of doing this inside Goldman is Goldman has the brand. We can recruit the best people. We our shareholder, Goldman Sachs, is willing to invest dollars and have long-term orientation. One of the disadvantages, to be honest, is our degrees of freedom and how much chances we can take are a little bit less than if nobody knew who we were. There are lots of startups, I'm sure in Egypt, definitely in the US, where somebody will come up with a product or an app, they'll put it on the app store. If the app has a very, very significant bug, or if it stops working, it's okay. Like, they put out the app, they learned from the experience, they took the app off the app store, they fixed it, and they released it back out again. It's very hard for Goldman Sachs to do that. I'll give you one example. So the first acquisition that we made when we started this business, today we have 5 million customers. The first acquisition we made was we bought a savings account bank from GE, General Electric. Now, for those of you that are familiar, GE is a very, very well-known brand inside the United States. It's not like nobody has ever heard of it. The bank had 150,000 customers. It had $9 billion in deposits. It was a very, very well-known brand and a nice bank that they had. GE was selling the savings bank, and so we decided to buy it from them. The day that we bought the bank, we only put out one press release that Goldman Sachs had bought this bank. We didn't do any press, we did not do any marketing, we did not do any other form of PR. And we also made no changes to the website other than we took the GE logo off and we put the GS, the Goldman Sachs logo on it. That was the only change that we made. Just because of that press release, the day that we owned the business, we got 25 times the traffic that GE had gotten the previous day. Our website crashed, our call center collapsed, we had 100 agents, the wait times in the call center went from a normal 2 to 3 minutes of wait time that a customer has to wait when they call the call center, it went up to 3 hours. We had to stop taking any calls, and then it took us 3 to 4 days over the course of the next, 3 or 4 days to basically get the website traffic under control, get the website back on, and work through all the calls that were waiting in the call center. And so I just share that example because that only happened to us by virtue of who Goldman Sachs is and the brand that we have, and the fact that this press release all of a sudden resulted in such high traffic. So my point, I share that story to make the point that sometimes the degrees of having a big brand is a blessing, but it also comes with some downsides because you cannot take the same kind of risks that you might be able to take if you're just a startup starting off in someone's garage.
And thank you very much. This is very inspiring, Omer. Reflecting back on the points you mentioned about the 4 issues for success of the startups as lessons learned, and relating to what you mentioned about visiting Egypt and Pakistan and the differences in consumer spending trends here and there, how would you reflect based on your experiences regarding this framework? Would it still hold for success in developing countries such as Egypt and maybe Pakistan also? How would you relate to this?
Listen, I think my view on it is that it is even more true in Egypt and Pakistan than it is in the U.S. Are there unmet needs and consumer pain points in Egypt and Pakistan? I think the answer to that question is definitely yes. Right? Does a startup, have competitive advantages relative to someone that has legacy technology or legacy business model? The answer to that question is, 100% yes. Can today a startup in Egypt and Pakistan, find investors and capital that can have long-term backing? I think the answer to that question is 100% yes. And, all the students that you have in the auditorium are gonna, end up being very, very, strong and successful management teams that will lead, billion-dollar businesses. And so the truth is that, on the one hand, places like the US, by virtue of its population and how big the economy is, are very, very, very large markets. And they're very mature markets. And so if I think about consumer banking revenues in the United States, the revenue in a year is $1.4 trillion across that's the entire revenue pool. So we're operating in very, very large revenue pools. Obviously, countries like Egypt and Pakistan, by virtue of the size of the country and the GDP of the country, don't have such significant, revenue pools. So that disadvantage exists. But are products and services in Egypt and Pakistan ripe for disruption? The answer to that question is 100% yes. Again, I'll share one statistic with you in my business, but this is true for every single industry. So we're sitting here at the end of 2020, and 1% of global loan applications were done online. So 99% of global loan applications were still done on a piece of paper, right? When I think about your students that are, 18, 20-year-old, 22-year-old, when they turn 40 like me 20 years from now, I don't know if that 1% is going to be 20%, if it's going to be 50%, or it's going to be 7%, but it's not going to be 1%. And by the way, that's equally true, not just of loan applications, which happens to be one example, it's true on everything else. And so I think that, on the one hand, we look at the pace of acceleration that has happened over the last, 20 years, and it's remarkable at the things that we can do on our phone, the fact that, my wife and I and our kids haven't been able to visit Egypt, and we can, FaceTime with our grandparents every single day. When I came to college 20 years ago, I was lucky if I was able to talk to my parents, on the phone once every 2 weeks. And by the way, it costs $3 a minute, in order to have that phone call. And so it's really remarkable how the world has changed. But the truth is, we're really in the first innings of, I think, what's going to be, very, very, very significant and rapid change that's going to happen for the next century.
This is quite insightful. And if we build on that, and given the success of Marcus in the past 4 years, how would you envision the future of Marcus? How would you envision the growth of this company?
Yeah, so I'd say a couple of different things. First of all, Goldman Sachs and our CEO has made a very significant commitment to growing this business. Over the last 4 years, we've been lucky, to have had the success that we've had, but, we feel like we're, in the early stages of, building a consumer bank on your phone. So, today on our phone, a consumer can open a savings account, they can get a loan, they can get a credit card, but we're building out all the products that a consumer would need in order to satisfy their financial services needs. So next year, we're going to be releasing an investment product. We're going to be releasing a, kind of a spending account or a transactional or a checking account, all done through your phone. There are no bank branches. And so we're going to continue to build out, the products that a consumer needs in order to manage their financial lives. We're also engaged in a series of partners. So we'll continue to acquire customers directly, and then we're engaged in a series of partnerships, discussions to get more partners. Again, people that have consumers but don't want to become a bank and want to offer financial services to their customers. And so you'll see us, continuing to kind of build it out. From a geographic standpoint, today we're in the US and the UK. And for the near term, our plans are to continue to build out in those two markets rather than, expand in other geographies. But as you all know, there's consumer banking and fintech disruption that is happening in, every single market. And so I'm just as an observer, I'm really excited to see all the different kind of business models and products and services that, come up everywhere, not just in the US and the UK where we are.
So, picking up on the fintech and these disruptions, how do you see consumer banking evolving in the future? What are some of the trends that you can foresee?
Yeah, I think, I think it's just going to be increasing digitization. I talked about the experience of 1% of the loan applications being 1% of the loan applications being online. That number is only going to change in one direction. It's only going to go up. I think the other thing that is happening a lot in the U.S. And in Europe, where again I spend a lot of my time. I suspect it's happening more in Egypt as well, is that, 30 years ago, Bill Gates, the founder of Microsoft, said this thing where he said, the world does not need banks, they need banking. And it's a very simple statement, but I think what he was referring to is that, for a long period of time, consumers have had to go to banks in order to satisfy their financial services needs, in order to open a savings account, in order to get a loan. The truth is that if you think about financial services, there are products in life that give us first order benefit, and there are products in life that give us second order benefit. Let me explain that to you. So if I go to a shop and buy, a tennis racket because I really like playing tennis, that is a first order benefit. That makes me happy. I really wanted to buy a tennis racket. I saved money for it. I went to a sports shop and I bought a tennis racket. That's a first order benefit. Nobody wakes up in the morning and says, I really want to use this credit card today, right? Nobody wakes up in the morning and says, I really am very, very excited to, write a check to someone. People want to take their wife out for dinner. People want to take their, kid to a baseball game, right? How you choose to do that is by taking out your credit card. So financial services doesn't give people first order benefit, and it's a second order benefit product. Nobody wakes up in the morning saying, I really want to use this credit card. And so I think that the evolution, so going back to this point that for 30, 40, 50 years, people have had to go to banks in order to get their financial services needs. And I think what's going to happen over the next 10, 15, 20 years is that financial services, instead of people having to go to financial services is going to find people where they already are. So you're going to see more financial services getting embedded in shopping sites. Because people are already in shopping sites, that's giving them first order benefit. They are choosing to transact there, and the ability to get a loan, right? Because when you are actually happen to be shopping for something will become much easier than the way it's traditionally happened. And so I think that people will find financial services where they already are, where they work, where they shop, as opposed to having to go to a bank like they used to in order to get a financial services product. And I think that's really, really important to understand kind of customer behavior and this whole notion of products that give us first order benefit versus second order benefit. I think you will find increasing digitization and you'll find increasing availability of financial services where customers already are, where they're getting first order benefit from the products that they're buying.
Thank you so much. Quite insightful. I have one last question for you before I hand over to my colleague, Dina, who would like to ask you some questions about the pandemic and the financial system. Now, given your vision about these evolving consumer trends, who do you think will be successful in the future among the different competitors and different players in the market?
Yeah, I think, so a couple of different things. The biggest competition that we face today is not, Bank of America or Chase or Citi or, any other fintech. honestly, the biggest competition that we face today is customer inertia. This idea that a customer, in our journey in Marcus, we've spoken to over 100,000 customers in surveys. We've gone in their living rooms, sat across the table from them one-on-one to understand how do they manage their finances? What are their pain points? We have 5 million of our own customers. We look at the data on them. The overwhelming thing that we hear from customers is that they are completely confused. They are overwhelmed. They feel like they have lack of control over their financial lives. And by the way, that's true for people that don't have a lot of money. That's equally true for people that actually have a lot of money. People feel completely overwhelmed by the choices in front of them. On average, a US consumer today has between 15 and 20 different financial services relationships between their various credit cards, between their checking account, between their mortgage, between their auto loan, between their insurance. Very, very, very disparate set of relationships with lots and lots of different institutions, completely overwhelmed, don't feel like they understand the products, don't understand what product is good for them. And so I actually think that the biggest competition that we face is customer inertia. And how do we make sure that we create products that are simple and easy to use and give customers the feeling of feeling in control and feeling like we're on their side? We're not trying to take money out of their pocket. We're trying to help them grow their money. So that's kind of number one. The second thing is that in certain products and certain services, you tend to have winner-take-all markets because once you get to a certain scale, the barriers to entry are so high that it's very, very hard for somebody else to compete. Think of Google and Facebook, right? So many people, Microsoft, Yahoo, have tried to compete on search, on your search bar. But the truth is, Google has a massive competitive advantage and a competitive moat that they have built, because the more you go on Google, the better their algorithms become, the better their search results become, and it's really, really hard to compete with them. And the data that they have becomes a self-fulfilling prophecy where it's really hard for somebody else to come in. Facebook is very similar, right? There are 3 billion people that use between Facebook and WhatsApp and Instagram and all the platforms that Facebook has. Google is very, very similar numbers. I don't think financial services will be like that. I think financial services will be a more disparate type of players. So this is not going to be a winner-take-all market. So I think that we will have a fragmented space. Clearly, there will be people that will have significant market share, but we'll be talking about 5% market share, 10% market share. We won't be talking about 70, 80% market share.
Thank you so much. I know we can talk forever, but my colleague has also prepared some COVID questions. So I'll leave the floor to her, and thank you, Omar. Yeah.
Great.
Thank you so much for your very insightful information. Actually, I would like to take discussion a bit towards what we are experiencing nowadays. So it's clear that COVID has shocked the entire world, like top economies, as you're saying, like US and even developing economies like Egypt. So it's clearly changing the way we work, the way we live, and even the way we act. What do you think is the big trend coming out of COVID?
Thank you for the question. Nice to meet you. So I'd say a couple of different things. First of all, purely at a personal level, the human suffering of this pandemic, cannot be ignored. My wife and I and our 2 kids, we live in New York City. At one point we used to own our own small business. Today we don't. My wife Yasmin is actually doing pro bono consulting for a lot of New York City restaurants that are, really struggling with COVID and managing the pandemic and kind of helping them helping small business owners understand, how to navigate. I'll just share one statistic with you. 40% of New York City restaurants have permanently shut down because they have not been able to survive, pandemic. And, for those of you that have been to New York City, every single block has, 10, 15, 20 restaurants, and that's really the livelihood of the city. And, for a brief period of time in September, October, they had reallowed indoor dining, and because of the COVID numbers rising in the US, New York City just recently, shut down dining again. And so the first thing is it's just at a purely personal level, it's really, really hard to watch. And, all of us that are on this Zoom are incredibly, grateful. I feel it, our family feels it, just to, not have the pain and suffering that, so many millions of people have had to suffer in the context of this. I think in terms of changes, I would say a couple of different things. First of all, I think that it's really important to separate things that are cyclical versus things that are secular, right? What are the things that are happening today because we happen to be going through this extraordinary period of time, but once things return to normal, people get the vaccine, things come back. And then what are things that are more secular, which they've kind of changed forever, And I think it's important because I think, it's very easy to look at how we're living our lives today and think that, it's going to be like this forever. For some things that's true, for some things that's not. So let's take a couple of examples. Do I think people are going to travel again? I think the answer to that question is 100% yes, right? People are going to fly again. People are going to travel again. International travel is going to come back. Now exactly when that comes back, how that comes back, is to be seen. But I feel very confident that, as scary as it sounds today, people will take cruises again in the US or in Europe or in Egypt. That's going to happen. I do think that business travel is going to change. Now, I don't think it's going to go down to zero. You can't take away face-to-face interaction. People will want to interact with each other. But even once COVID is over, then, I had no issues getting on a 6-hour flight one way to California for a 1-hour meeting with Apple. I don't think I'm going to be doing that, Now, if it's a 3-day meeting and it's an offsite, I'll do that. But the next time somebody tells me to fly 7 hours for a 2-hour meeting, I'm going to think twice. Zoom works just fine. So I do think that business travel will change. It won't go down to zero, but it will change. I think that let's pick another example, which is like the future of work, right? Again, there are companies that have gone remote forever. I personally think that that's not going to be long lasting. I think that as soon as people feel like it is safe, I happen to be sitting right now on my floor in the office. Usually this floor would have 400 people. I think today I'd be lucky if I find 4. There's nobody here. I think that we will go to some kind of flexible working model. People will not be expected to be in the office every single day. But I think that, people will be back in the office and, when it is safe to do so. Now, does it happen next May? Does it happen next August? Does it happen next December? I think that we'll have to see. But I think that distinguishing those two things, what is here changed permanently versus what is, things that are just a moment in time and will come back, I think it's really important. The one thing that I will say is that, I don't know who said it, it's not my quote, but, sometimes decades feel like a year and sometimes a year feels like a decade. This is a year that feeling like a decade. I do think that, you know, the acceleration of certain digitization trends, you know, how people order their groceries, the fact that if I happen to, you know, develop a skin rash, that I can get on my phone and just show it to a doctor without having to, you know, actually make an appointment, go sit in the waiting room for 2 hours and wait for the doctor to come, only for him to tell me within 3 minutes that I need to go buy some off-the-shelf cream. Like, that thing has changed. Like, I actually think that certain digitization trends around things that were late in terms of digitization, how people ordered their groceries, how they did financial services, how they interacted with their doctors for minor things. I do think that that is, you know, changed and we've had a step function change in how people will choose to do that over their phone versus, you know, do it in person.
Okay, thank you so much. Another question would be, if we focused on one of the most important determinants for financial and economic activities, which is consumption. So it's clear that consumer spending, or the way the consumers are spending, is changing dramatically, even before the time of COVID. So there is less cash observed. The question is, how do you think COVID will affect the cash payment or the payment trends, and whether do you see any potential or possible opportunities in there?
Yeah. You know, I think that, again, I think this is one of those things that we have seen a step function change. It was happening before COVID, and I think it's only going to get accelerated. So, you know, I pick up my phone, you know, on average, like everyone, 100 times a day, right? That's the statistic. So if I use it to listen to music and check news and send messages and be on FaceTime, then the idea that I don't use it to make payments is a little crazy, right? And so I think that in terms of mobile wallets and how people are going to choose to pay, it's only going to, you know, there's been a step function change, and that's only going to change. You know, there are 100,000 bank branches in the US. Branch traffic every single year for the last 5 years has been declining between 15 and 20% every single year. So now for the last 9 months, people have not gone inside their bank branch, right? Or very, very, very few people. They've been open, but very, very, very few people have gone inside their bank branch. And so even people who thought they could not survive without their bank branch are now getting comfortable with the idea of not having to go. So I think the decline of cash, the fact that people will do things with their mobile wallets or do things with, you know, a credit card, I think has seen a step function change, and, you know, it's only going to change. Now, having said that, it's still really, really hard today to, you know, to do something. I'll give an example. Honestly, this is a real life example for Yasmin. Yasmin my wife, had one of her friends buy something for her in Egypt. Now, that thing cost, I don't know what the number was, but like, I'll pick a number, $75. You know, I think Yasmin for the last like 3 weeks is struggling how to get her friend in Egypt $75. You know, she's tried PayPal, she's tried Venmo, she's tried all the different apps, you know, and it's actually still really hard. So on the one hand, we've seen step function change. On the other hand, there's still lots of opportunities and consumer pain points and unmet needs in terms of simplifying cross-border payments, how people pay, how people shop, and that's honestly where the opportunity lies.
Okay, if we focused more on actually people, it's clearly a challenging time to people across all countries. So with the high unemployment being observed, how do you think the pandemic affected workers, and which industries do you think required financial assistance more?
Yeah, listen, I think, you know, one of the things that we spend a lot of time thinking about, I personally spend a lot of time thinking about is, you know, on the one hand, you know, we've seen unemployment levels that, in the US, and again, I'm sure it's true in Egypt and other places, but in the US, that, you have to go back to the Great Depression to think about unemployment levels that are this high, just the sheer number of people that lost their jobs. On the other hand, unlike even, the last recession or the financial crisis, the government and the Federal Reserve in the US was very, very, very quick to act and very quick to get money into the hands of people that were suffering. And so you do see a situation where very, very high unemployment, people really suffering, but on the other hand, people getting help much quicker than they have in past recessions. And so just, a little bit of a dichotomy relative to, previous recessions. I think that the industries impacted, honestly, are the ones that, you would think are the most obvious. The service industries, the travel industry, got hit obviously the most. On the other hand, places like Amazon, has hired hundreds of thousands of workers because, in the US, if you happen to be an Amazon Prime member, you can get 2-day shipping. In the peak of the pandemic in April or May, you had to wait a month in order to, get your package. And so you've seen a rebalancing of jobs. Overall, unemployment still very high, even with the rebalancing, very significant government support. And I think really the question is going to be two things. One, I think that some companies have structurally realized that they don't need as many people as they thought they did. So even when unemployment, when employment comes back, in the US prior to COVID, we basically had near full employment. I mean, unemployment was running in low single digits. I'm not sure it'll come, I'm not a macroeconomist, but I'm not sure it comes back to that level, number one. And number two, I do think that this rebalancing of jobs will continue to happen because, there's just certain, if business travel does not come back in the way that it was pre-COVID, which I don't think it will, then the travel industry by definition is going to have less jobs than they did prior because, overall traffic has gone down.
So another question, building on what you were saying concerning Great Depression and financial crisis, do you think the role of banks and financial institutions nowadays has differed if compared to what they were doing in the past or what they did in the past crises?
Listen, I work for Goldman. For those of you that are familiar, with it, Goldman was criticized during the last financial crisis. We, along with other banks, were seen as part of the problem in terms of why we had the last crisis in the first place. This time banks are seen as part of the solution. In the US, there was a very significant government program that started right at the beginning of the pandemic around, giving loans to small businesses in order to help them meet their rent and their payroll. The banks and the financial institutions facilitated those payments. And, by all accounts, did a pretty good job of making sure that that money ended up in the hands of the small businesses that needed it the most as quickly as possible. And so the good news is that the relative to the last crisis where banks were criticized for being part of the problem, this time they've been very front-footed in terms of, helping helping businesses. We put at Goldman, and I'll just share, an example, in our business. So consumers with us have a loan or a credit card. We instituted within days of the pandemic. So this is going back to March, when the shutdown happened and the unemployment started, a customer assistance program that customers who had a loan from us who wanted to defer a payment and not, wanted a couple of months of breathing room because they were facing challenges in their personal life, had the ability to, defer a payment. Other banks had that too, but the one advantage that we had relative to other banks is because we are creating a bank on your phone and we have, modern technology, all a customer had to do was send us an email or send us a text, and they were automatically enrolled into this customer assistance program. Another bank that is sitting on old technology would have a very, very hard time doing that. You'd have to call, you could not really go into the bank branch or didn't want to go into the bank branch, and you could get on the phone and, you'd have to wait, in some cases hours to talk to someone in order to enroll in that program. We were able to enroll a customer in that program within seconds, again, by virtue of, making it really easy for them on their phone.
Okay. So now I have like a couple of questions. They are different in nature. It's not like a scientific one or has to do with banks, but more a personal question, if you allow it.
Sure.
So, as far as I understood, that you were born in Pakistan, Karachi, right? And then you moved to US, and you're married to an Egyptian wife. So my question is, how your background helped shaping your career?
I'd say a couple of things. First of all, I grew up in Pakistan. I came to the US for my undergraduate. And so I've kind of lived, half my life in Pakistan and half my life in the US. I'd share a personal story. When I came to the US, I grew up in a middle-class family in Pakistan. My parents gave me a phenomenal upbringing, and did everything they could in order to, invest in my education. But I came from a middle-class family. We didn't have a lot of money, and so I was lucky enough to get into a university in the U.S. that gave me a near full scholarship. I came to the U.S. I had $150 in my pocket. I had never seen snow before. And I ended up going to New Hampshire, which is one of the coldest places in the U.S. Winters there are minus 40 degrees. And I really like quoting minus 40 because A, it happens to be true, and B, it's the same temperature, whether it's in centigrade or Fahrenheit, so nobody gets confused. But it was, it was like a really, you grow up very, very, very quickly. When you're in a foreign land, trying to figure out the world around you, also being very, very far from your family and your parents. And so, I was very lucky to be here, but I think, there's a very big debate happening right now in the US around the topic of immigration. And, if you think about so many successful startups in the US, Zoom, the fact that we're all on this, was started by, a Chinese immigrant that got rejected for a US visa 5 times before he showed up here. And obviously has created, a multi-billion-dollar company that has kept billions of people connected during the course of this pandemic. And so I think that, I'm a big proponent and a big believer, and I've been a huge beneficiary of immigration in the U.S. and the idea that so many immigrants, by virtue of their background and who they are, develop grit and work hard and feel like they have to prove themselves, and obviously luck has a lot to do with it, so I don't want to discount that at all. But a combination of luck and a combination of hard work, can result in, a successful life and a successful career. And I'm a huge beneficiary of that and feel lucky and humbled to be in that position.
Thank you. My last question. I can tell that our students in here, we do have like Ph.D. students, M.Sc students, and undergraduate students. They are actually extremely unique in terms of capabilities, skills. They are passionate, hard workers. So we can say that they are our future leaders. If you can kindly tell them or share with them one advice that you have learned throughout your career.
Yeah. So I'll cheat a little bit and I'll share two. Yasmin and I are lucky and blessed to have two wonderful kids. Our son is 8 years old, and our Yusuf, and our daughter Sarah is turning 6 later this week. Although I feel like she's been celebrating her birthday every single day this month. So I'll share two stories about both of them. Which I think, speak to, real advice. Kids, for those of you in the audience who have them, have a very remarkable way of reminding their parents and giving them really, really important life lessons. So, I was getting our son to bed about a year ago. He was 7 at the time. And, he was doing what all 7-year-olds do, which is, procrastinating and not wanting to go to bed. Dad, what do you do for work? And before I could even answer the question, he asked another question, which is like, well, how does it make the world a better place? And, it's a very profound question from a 7-year-old to be asking that. And it really makes you think. Of course, I went on to tell him, I help people manage their money, to which he had a very funny response. He's like, all I see you do is emails. So I don't see how that's helping people manage their money. But anyway, I share that because it's something I think about, Yasmin and I think about a lot, which is, it goes back to a little bit of what I said earlier, which is, how to, your business, you're going to measure it with revenue and profit and customers and funding and valuation, but ultimately there needs to be a higher purpose for what it is that you're doing, and if you find a higher purpose in the work that you do, then you will just have so much more satisfaction from your job and so much more satisfaction in the things that you're building. The second piece of advice that I'll give you is from my daughter, Sarah. Again, 100% true story. I work a lot, and I tend to work, unfortunately on weekends. I, do calls, conference calls and things like that over the weekend. And, a lot of times my kids are in the background listening. And, a few months ago, it was actually during COVID, it was in April, May timeframe. I was doing a call on the weekend, and I hung up the call. And as soon as I hung up the call, my daughter Sarah was like, "Is the call over?" I said, "Yes." And she said, "Can I ask you a question?" I said, "Sure." She said, "How come there are only boys at your work?" And I said, "Sarah, why would you say that?" She's like, "The only people that I hear you talk to are boys. You talk to Stephen, you talk to David, you talk to John, you talk to, and, of course, we have very, very successful, very senior women employees. But the truth is that we are not as diverse a team as we can be or should be. And, I take that story with me as my 4-year-old who is listening to my calls and is having an observation that she only perceives that the only people I talk to are men. And so I think that having a diverse workforce is super important. It's really important to, not just because it's, you have to do it, it's the right thing to do. And again, for our business where we are serving Americans, we need to have a diverse team that reflects the true diversity of America and our customer base in order to serve them well. And it's not just about women, it's about having African American employees and having Hispanic employees. And so, my one piece of advice to all the students is, as you're thinking about your businesses and creating businesses, really focus on, having a diverse team, because ultimately it will result in better business outcomes.
Thank you so much.
Thank you so much, Omer. It's been an honor and a pleasure, and I especially like the second advice. You have two women hosting this webinar today, so are as diverse as can be. I want to close by thanking you again, and I want to pick up on what you mentioned when you can have a year worth decades. I think this 1 hour is worth years of experience. So thank you so much again, and it's been a pleasure and an honor. Thank you.
Great. Thank you for having me. Thank you for having me. Happy New Year.